Hey everyone, welcome back to my channel, Addie P's Real Estate Tea. I hope you all are having an amazing start to your 2020 new year here. Before we get started, you know what to do. Give this video a thumbs up, help out my YouTube algorithm here. Also hit the subscribe button and please hit that bell notification to be notified of future videos on this channel. And as always, if you're watching from Instagram, thank you and show your girl some love. All right, let's get started. So I just wanted to briefly come on here today and talk about a couple differences between an FHA loan and a conventional loan. All right, as we are seeing more buyers enter the market, it's important to arm yourself with the tools necessary to navigate through this process. So any little bits of information that you can collect is perfect. So the first loan that we're going to discuss briefly here is a FHA loan. FHA, or Federal Housing Administration. It is a government-backed loan, and it is geared for buyers who may have a lower credit score, a higher debt to income ratio, and also in some cases with a FHA loan, a lot of FHA buyers may not have a lot of cash or down money to put down. So that down payment requirement is only 3.5%. And in the cases that you need some seller's assist, with FHA, you can get up to 6% seller's assist. So those are all perks for somebody who may be a first-time home buyer. FHA does have a requirement in most cases that they want you to occupy the property, though. Now, with all that being said, they do, the lender has to have some kind of reassurance, some kind of cushion. That cushion is that they require you as the borrower to secure mortgage insurance, which that's insurance, excuse me, and that is put in and rolled into your mortgage payment. That is to, like I said, give them some cushion that in the event that you default on that loan, the property begins to go through foreclosure proceedings, whatever the case may be, that they are covered on their end and that loan is indeed paid. Also, another piece of information with FHA is the FHA appraisal. FHA appraisals tend to be a little bit more picky than what would be a conventional loan, which we'll get into that in just a second. But with FHA, they care about chipping paint. They care about, certain things that may potentially be deemed as hazardous to that borrower who will eventually occupy the property. Now, those things, if they are deemed to be important, that they need to be fixed, they will have to be done prior to you moving into the property, and in fact, even prior to you getting the loan. You will not get the loan until those things are done. The FHA appraiser will schedule time prior to settlement to come back out, take a look, and make sure that all those things are done. Now, those repairs can be either negotiated amongst you and the seller as the borrower, or you can take care of them yourself. Whatever way that operates, whatever way your contract is written up, so be it. But those are the main key components of a FHA loan. With conventional loans, they're a little bit more flexible. And most times, you don't have to actually occupy the property in order to secure a conventional loan. However, they do have stiffer credit requirements, and also in some cases they may require you to have a lower debt to income ratio, and you may actually have to put down more money. Some conventional loans are what you'll hear 80-20, where the lender will give you the 80%. You have to come up with that 20% down payment for your fees there. And in some cases, though, some lenders do offer 3 to 5% down payment money on the loan, and in those cases I've seen that they do want you to indeed occupy the property. Now, in comparison to FHA's appraisal requirements, it's a little less stringent in that sense, where conventional appraisers, and they come out, they really don't get too picky about things. I've had a couple of transactions where they may flag one or two things there, but nothing major. And in fact, it's been actually more deferred maintenance than anything in that sense. So it's not really anything that would slow up the loan. These tend to be more rigorously looked over loans in that sense, because the bank is not backed by the government. So these are private loans, private lenders. So they definitely are taking all the precautions that they can to make sure that they are lending to you in good faith, that all that what they see in front of them, you qualify, and that's that. So those are the main differences between FHA and conventional loans. If you want to know more, please comment below. Again, if you're watching from Instagram, do the same thing, comment below. If you have a story to share about your loan, also comment below. I'd be glad to hear from you all. Thank you again, and I look forward to the next video. Until then, have a blessed day all. Take care.